Invest in your trading success for 2025. Improve on your trade model, your trade execution with one-on-one coaching sessions. Have a trade accountability partner. We coach for timing location, trade location on price, modest leverage, deploying patience, and measuring at least once a week, once every 2 weeks, ROI trade performance. Book a discovery appointment to see if one-on-one trade coaching is a right fit for you. Welcome to the new week. We do have a holiday, Monday the 20th. That's a no trade. And the day after the holiday is always going to be a no trade, because if your time to trade is the morning AM when the New York market opens, definitely it's going to sort itself out because there was a holiday. So I'm not going to do anything Tuesday. I'm not an afternoon trader, especially after the day after a holiday. Wednesday, I'm going to get involved, Thursday and Friday. So we have 3 catalyst days, 10 a.m. on Wednesday, the 22nd, Thursday, 8:30 a.m. Eastern, Thursday, and then Friday, the 24th. The real big one is 9:45, but I'll wait to let that settle out because we do have another one that's secondary in importance, but that's a double-barreled catalyst, Friday the 24th. Those are the times. We'll move now to price location. Okay, everything hinges for the new week and getting a payout on the higher time frame. So let's take a look at the weekly chart here, because this is the higher time frame I'm going to use for reference. And I've got dotted lines here. So we'll start with the week that we just completed, which was the prior week. And that prior week had some interesting lines. So I've got a line down here, and that is signifying basically the candle bodies of the past 2 weeks for 2025. And that's coming in, let's just call it 5860 zip code. Now, if we go to candle ranges, we just completed the last candle, the first candle of 2025, with the largest candle body, not counting candle wicks. And that body, if we compare it, is smaller than the body in December. And this body was a black candle down. And what was significant was this was the FOMC. This green candle body was the CPI. And just so we're keeping it real here, my opinion on the CPI was it was totally bogus, because shelter, food, all the things that matter for people to survive really is not going down. We all go to the grocery store. We all pay a mortgage or rent. At least a lot of us do. And we haven't seen those prices, yields or prices at the grocery store, go down. So in my opinion, inflation's still high, but regardless, we went up. And here on this candle with the Fed cut, we went down. So I based fib levels, and the first fib level is the 50% fib. So that comes in at 6014.75. And that's right here where my cursor is. The next fib, where you see the premium candle wick hit, is the 0.618 fib, okay? And that comes in at 6050. So we did go, that was the previous week high. And then above that is the 0.705 fib and dash. And you can see both candles of 2025 have hit this level, okay? The black and the green have both hit the 50%, the 618, not quite the 705. So I'm going to go back even further to the election. After the election week, we had this huge candle. So that was the other issue. And just with these lines that I've drawn on these 3 lines and pointed out, just note that the height of that green body candle that's the upper zone area. So that's my guidance for location. I'm looking for a retracement at least to the 50% for the new week, which again is 6014. 0.75. And then below that, I've got a line under these three fibs dashed at 59.80. 59.80 is not a fib number, 59.80, but I drew it out based on smaller time frames like the 4 hour. So that's my secondary retracement level. So first is the 50% for the new week. Second, if we go deeper, is at least we go down to a 59.80. And this is based on the weekly. And the charts we always want to look at as where is the current week relative to the prior week, relative to the other big range, which was the Fed, and then, of course, the election. Next chart. On the left, we have the range chart. That's the Renko with Keltner channels. And on the right, you've got the 4-hour chart with Bollinger Bands. So let's start with the range chart first. So basically on the left side, we have that Wednesday premium going up and driving into the upper Keltner blue. And it just keeps going into Thursday. And we finally hit that red line. The mid red is the Keltner. So that's balance, and call it in the between premium and discount. And then here's Friday, we go right up and just jam job here at the close, almost to the upper blue Keltner, which closed at 6059. And that mid is 6009. And that mid is the red line right here. And it's just under the 50% fib, which we already talked about at 6014, 6014.75. On the right, this is my go-to 4-hour chart, and this is the CPI number right here. This is the giant 4-hour candle from the CPI news. You can see the reaction. We had a middle Bollinger Band on the 4-hour chart, and we have not touched it since last Wednesday. And you can see we bull flagged into Thursday, Friday, we jam job, still keeping it above. And again, here is the 59.80, which was my second target for the new week, which is above the middle Bollinger Band at 59.68.89. And the next dash line is the 50%. Next is 0.618, 6050. And then, of course, above here is the 0.705. So there you have it. This is really helpful, marking the lines out first on the weekly, then going down into a smaller time frame, which I didn't even go into daily. I skipped over the daily to go to a 4-hour because that's been really working for me so far in the new year, is going weekly and then going to the 4-hour. So range chart on the left, just if you look at it and eyeball it, we have really need to get back down here. And the 59.80 is this line right here. So yeah, it's below the mid, but I just think we wouldn't be too terribly in a discount when you consider the 4-hour over here. So from a range perspective, that's not that much, but I just don't think it's going to happen necessarily before Wednesday, Thursday, or Friday because of the holiday. And then this is my go-to chart. I'm going to be watching it. And then again, the trend can keep going up, but I'm marking out the spots here. So why do I have a fixation on a retracement happening? Out of the three of these charts, the dollar, the VIX, and the treasury yields, it's the one on the left that's got me convinced that we will have a bit of a retracement next week if this dollar stays elevated. Notice this big green candle. So remember, inverse relationship. You can't have the S&P 500 keep going up and at the same time having the dollar going up. That's not normal. Usually it's the opposite. Dollar goes up, S&P goes down, but that didn't happen Friday, did it? So something's amiss. I think there was manipulation, intervention, call it what you may, but see this big rectangle right here? The dollar is totally respecting that by not penetrating it with a candle body. Candle wicks do the damage, but the bodies tell the story, right? That's what the mentor says. And I'm telling you here, we've had several days above this fair value gap, and we held it, and we're got distance. So we're 109.4 on the close Friday, and I'm going to closely watch the dollar. The VIX is a different story. We had that big day for CPI where it went down all the way down here, call it 15.97 with the candle wick. And you can see here, we closed on Friday right at that same level of the low of Wednesday. On the right, yields have definitely collapsed on the Treasury yield. We went through the fair value gap. We went through one volume imbalance. We pierced the second volume imbalance near the 6th and 5th of January, but we stayed above it on a close of a candle here on this last volume imbalance. If we would have closed below this, then I would say, oh, that would leave me a little more caution. But it's the dollar that I'm going to really be watching. And to me, it's still going to be looking for 110 and above if we keep these 109s moving. Bullish dollar means I'm going to see a two-way market at least. I'm not going bearish S&P 500. I'm saying two-way. We'll have ups, we'll have downs. So that is real important. Now let's go to the internals. All right, here's the Mag 8 internals that I like to follow from left to right on the top row. This is the ugliest chart I've got here on the downside. Take a look. They're all starting at 2025 beginning. You used to have Apple going straight down. What is going on with Apple? So that's got to be an issue for the S&P 500 because it's one of the highest cap weighted tech stocks in there. NVIDIA, if you take in flag from beginning to how we closed Friday, we're just lateraling it here. It's really not up. It's not down. It's holding its ground. On the next Tesla, this is one of the most bullish. And so that is really going to be bullish probably because the new president and Tesla, it's going together, and that is diagonal up. Google, and that is on the right top. That's okay too. That's got an up diagonal. Lower left, Amazon. Again, we start here in 25 and we close Friday. And Friday again was the 17th. So 2 weeks, an okay diagonal up. Oil up, diagonal, and Bitcoin. That is pretty much the belle of the ball. So that's looking to be very bullish up into the inauguration of the new power, and they're pro crypto, Bitcoin. So I could see that potentially breaking higher above the all-time highs. And then we already covered the dollar. Okay, we close the video with the daily charts. On the far left, you have the Bitcoin. And the thing about the Bitcoin is it's pierced the upper Bollinger Band, not like they were wide Bollinger Bands. 5-day week, we had lower Bollinger Band down here in the 90s, and we go and we close out at 105. That's a really good week. So I wouldn't be putting new longs here just because it's already up there, but it's really apparent that this was the winner of the week. In the middle is the S&P 500. We closed above mid Bollinger at 5974.59, and the 3 EMA closed at 5995. And you've got the lines that I've already discussed. 5980 is right here, so that's coming in right around the mid Bollinger Band if we do have a retracement. And the 9 EMA in red is 5964. So that left us basically with a little bit of air, 2 air candles Thursday and Friday that closed above the 9 EMA. We'll have to see where we open on the new week. On the right, we have the NASDAQ, and I don't really trade it, but it's just important to note that we basically had this very, very similar price structure to the S&P, where we closed above the middle. And you could say it's basically still got some distance to go on the upper Bollinger, which is 22042.43. The upper on the S&P is 6102. So if we break through all these fibs that I already talked about, it could be that we just have to get to 6100 next week before we retrace back lower. So that's it on the dailies. That concludes the video, especially on the higher time frames. And just remember, it's a Wednesday, Thursday, Friday targeted days for trading, and not so much on Tuesday since it's a day after the holiday. Thank you so much for your watching. If you made it this far, shout out to the new viewers, and big shout out, and want to just share my appreciation with all of the tribe that is subscribed already. Thank you so much, and I hope this helps you for the new week. Have a good trading week. Aloha. Bye.